Well, folks, we have stocks crashing all over the place. And I'm not talking about small companies. I'm talking about massive market cap companies. And I thought I would bring this to your guys' attention because all these stocks we're about to go through, pretty much all of them are not popular retail stocks. This isn't Tesla. This isn't Palantir. This isn't Meta stock or stocks like that. These stocks are huge market cap companies that aren't really popular with the retail folks. And I thought I'd draw these to your guys' attention because I'm telling you, we have some epic moves down here. And I'm going to tell you in this video if there's some opportunities, and there are some opportunities in a few of these stocks here today, okay? But most of these we're going to go through are not popular retail stocks, so these don't even register to a lot of folks that might watch my channel or just kind of, are retail investors in general. So I hope you guys enjoy me bringing these to your attention. We got stocks collapsing, folks. Appreciate everybody joining me. As always, thanks so much. 26,400 plus subscribers, I believe, on the channel now. Thank you, everybody. Subscribe to the channel. I appreciate y'all in a massive way, okay? Right off the bat here, Starbucks, a massive move down here today, almost a 10% move down, $119 billion market cap. This is a big company. Now, you might think, okay, stock moved down big, their earnings must have been horrible. No, their earnings were great, okay, about as good as you can possibly get. Total revenues were up over 14%. You'll take that. In this environment, you will take that for S-Bucks. Their total operating expenses were up a little less than 12%. Now, that's good on two fronts. The first reason is you want to see your revenues growing at a faster clip than your operating expenses. That's going to mean great things for your business model. If you can consistently do that, that's great news. The second reason this is huge is because obviously revenues is a much bigger number than expenses. So if you're growing that a much bigger number at a better percentage than the lower number with the lower percentage, that's going to mean really good things for you overall. That's going to mean your operating income's blowing up. And that's exactly what we see here. Operating income up a shocking 39.9% year over year. Now, do keep in mind they had this gain of assets for kind of a one-off situation here, and that was about $91 million, so that helped their number boost up even more. But still, you take that out, and you still got, let's say high 20s, maybe low 30s operating income up as a percentage. That's incredible. Very impressive for Starbucks, okay? If you look at their net income up almost 35%. If you look at EPS, up about 36%. I mean, those are incredible numbers. So you may say, what is the issue with Starbucks? I mean, it looks like the numbers are great. Shouldn't their stock have been up 10%? Here is the issue with S-Bucks, okay, and Starbucks stock. This is a stock that trades pretty darn rich, okay? If you look at their 2023 numbers, basically they're trading at about a 33 based upon the earnings that are expected in 23 here. 24, you're paying about a 28. So Starbucks is not a cheap stock. And when you're not a cheap stock, for a stock like this, you would usually expect to pay roughly a 25 forward P or something like that. And so when you talk about these sorts of numbers, you need to just absolutely destroy every earnings. And if just a number or two are off, it causes your stock to go down. And so I believe that's what happened with Starbucks here. The company it was priced too richly in this environment going into an earnings like that. And that's why the stock fell. Now, if you buy Starbucks today, are you going to do bad on it? Not in my opinion. I think this is actually an opportunity in Starbucks. I don't think it's a great opportunity, but I do think it's an opportunity if you really just want to be in a stock for the next 5-10 years and you just feel comfortable putting money there. Like I said, I don't think it's a steal deal by any stretch of the imagination. There's a lot of steal deals in this market right now. I don't think this is one of them, but I also don't think you're getting ripped off in S-Bucks overall. But yeah, big move down, almost 10%. PacWest, another big bank. It looks like another one is going under here. This stock has gone, look at this, man. In less than 2 months, from $26 to $2. It was at $6 today. It's $2 after hours. It looks like it's likely going under. And so likely another big bank is going to have to acquire this one as well. And obviously with the Fed raising 25 basis points today, it reminds me of a scene in a movie. You guys ever seen the original Die Hard movie with Bruce Willis, the original Die Hard I'm talking about, right? And somebody that's at this party with him before, obviously the guys take over the building and whatnot, right? Hans basically, shoots the guy in the head, right? And he's on the whatever you call it, the walkie-talkie thing with Bruce Willis. And Bruce Willis didn't do anything to save the guy's life. And Hans wanted Bruce Willis to give himself up, right? And he says, maybe eventually I'll get to somebody you do care about. And it reminds me of the Federal Reserve right now because they're letting these banks just go under. Wall Street's sending them down one after another after another. And it seems like Wall Street's in that Hans position right now. And they're like, maybe eventually we'll get to somebody you do care about, Fed, because clearly you didn't care about First Republic or SVB or PacWest. But eventually, we're going to get to a bank you do care about, and you will start lowering rates. And that's exactly what's going to happen. Eventually, they're going to get to one that the Fed does care about. And when that happens, that's when you're going to see the Fed reverse course really, really, really quickly. And it's just a question of when. First Republic, PacWest, a lot of these guys, SVB, no. But eventually, they're going to get to somebody they do care about. And that will be the moment that the Fed says, okay, that's enough. That's enough. I give myself up. I'm going to go ahead and I'm gonna just go ahead and start lowering rates. Believe me, it will happen. It's just a question of when, okay? Artista Networks. This stock is down over 17% here, folks. 17% this one just dropped. And this is a $40 billion market cap. A net stock. Absolutely massive move in regards to this one. And I got to say, with Artista Networks, actually a very fair valuation on this one for the first time in a while. And so I do think there's an opportunity in Artista Networks. I might have to go in depth on that one at some point in time and kind of explain their business model. But that one, there is an opportunity in that one, okay? Qualcomm. This one matters for Apple and for the entire semiconductor complex here, folks, okay? This one moved down almost 3% going into the earnings here today, which makes you think, did somebody know something? And it's down another 7% or so after hours. $125 billion market cap on Qualcomm, okay? What happened here? Well, their earnings per share came in line, okay? Their revenue came in slightly ahead, but this is where things get bad, okay? Net income during the quarter ended in March. It fell 42% year over year. That's a disaster, but it got worse. Qualcomm said it expects around $8.5 billion in sales in the current quarter, short of Wall Street expectations of $9.1 billion. Analysts were expecting current quarter earnings guidance of $2.16. The company said they're going to do around $1.80. Oh boy, okay? Oh boy. This shows you that likely smartphone sales are very weak. Now, if we have to guess, I don't know if Apple sales are going to be that good. If I had to guess, okay, Apple's earnings are going to look not very good. We're getting all the telltale signs of a situation that is a potential of Apple earnings not being good. When you look at, we'll see what Apple earnings come in at it. I mean, it's less than 24 hours from now. But when you have a situation like this, folks, where you have companies like Qualcomm coming in with these sorts of guidance numbers, when you have situations like you're hearing MacBook shipments being down something like 40% on a year-over-year basis, when you're seeing all this play out, and you're hearing about the weakness in hardware sales, and at the end of the day, you start putting all these pieces together, and it starts to lead you to a place of like Apple earnings probably aren't going to be that great. And the main thing I'm thinking about is their guidance. What is their guidance going to come in at Apple? Could that be in a really weak place, okay? So maybe somehow Apple's going to report amazing numbers and amazing guidance, but if you just put all the pieces together, it seems like it's almost impossible given all these other factors we're looking at here. And so it's definitely a possibility Apple could report bad numbers or bad guidance or potentially bad numbers for this past quarter and bad guidance, which would just be a whole bad situation. Now, Tim Cook is a pretty good, in my opinion, stock pumper, okay? He's a good guy. He does usually a pretty good job at telling a story around, and being optimistic and those sorts of things. We'll see. I don't know, man. But you just put all the pieces together, it's not looking good for Apple, okay? So here you are at Qualcomm, with obviously very weak numbers here in the short term. I don't even know if I could say necessarily, and I'm a shareholder of Qualcomm, and I've done terrific on that stock. It's done amazing for me over time. I don't know if I can necessarily say it's an easy buy right now, to be honest, because we don't know how deep this is going to get in the semi space. If you got a longer term outlook, it probably is. AMD stock, okay? AMD just in the past month is down over 14%. Just in the past month. Today alone it was down over 9%. And AMD's $131 billion market cap in regards to AMD. Now, I got to say this in regards to AMD, okay? Because you might want to say, is this stock a deal? Is it not a deal? Okay? So, AMD is actually very fair valuation for AMD. It is actually a pretty good deal, okay? Here's the deal. Forward P, if they come in with 290, which is expected, about 30 plus analysts, cover the stock and have put out numbers there. You're paying about, let's call it 30 times on 2023 numbers. I think that's very fair for AMD. You're buying a best of breed company. You're buying, a company with Lisa Su that's led this company. I mean, remember Lisa Su, when she came into this company, the stock was less than a $5 stock, if I recall. I mean, this was a joke. This was like a $2, $3 stock. I mean, it was looked like AMD was going to be done. And Lisa Su came and revived this company and built it into this great company, right? That is so well respected now. And so I think management teams like that always should command a premium over the market because they've proven what they've proven. And that's just, incredible what she's accomplished here. And obviously I like the business model for the long term. So a stock like AMD is actually a very fair valuation at this point in time. I don't know if is it as good of a deal as, let's say, Meta was last year or something like that? No, but at the end of the day, also do remember AMD went all the way down to $55 at the lows. I don't know if it's going back to $55, but could I see the stock in the 70s? It's a possibility. I mean, heck, it's only a few dollars away from that. So when I look at AMD, I see a stock that actually is a fair valuation, good balance sheet on the company, healthy company overall. Obviously, in the short term, the numbers are rough. They should be rough this entire year. That's just the way it is. But I look at a company like this as having long-term growth ahead, okay? Now, this does make me think and consider a stock like Nvidia, right? Because you see AMD numbers kind of rough there. AMD and Nvidia, they kind of go together a little bit, right? And sometimes one outperforms the other in certain markets and things like that. This stock's had a big run-up, and I am a little concerned about Nvidia in regards to their next numbers, kind of seeing what some of these other semiconductor companies are posting up for numbers, seeing what AMD's saying. I think it's very much a possibility that Nvidia's upcoming earnings won't be all that. And but there's a lot of dynamics at play with Nvidia stock that make it's a weird situation because I know there's been a lot of people that have been playing put options, and I just worry that a lot of folks are going to screw it up somehow. And so I don't know, I can't trust it. Because it is one I'm tempted to buy put options on for their earnings. I'll be honest, 3 week out or 4 week out, something like that, put options. I'm very tempted, but I don't know, man. I feel like I don't know. It seems so obvious, but seems like something's going to get screwed up there. I don't know, man. Okay. ExxonMobil, $400 billion plus market cap. This baby's fallen 10% in just 3 trading days. Nearly 10% in 3 trading days for a $400 billion market cap. It's incredible, right? But it's WTI. Crude oil is going down, and it's going down fast. I mean, you look at April 10th, less than a month ago. Crude oil was $82. It's down to 66 on WTI now at this point in time, right? There's a 5-year chart, by the way, of WTI. And so, this is a time period when, if anything, you should be seeing oil prices go up and up and up, right? We're in May right now. Summer is going to be right around the corner. And so this is a time period you usually see. I mean, usually what you would kind of see is a chart that's starting to move up. I mean, the fact that this is moving down going into summer you got to kind of question, what is going on here? I don't know. Maybe it has something to do with recessionary concerns. That's the only thing I can think about, because it's not like we've seen massive increases in production. It could be some manipulation going on. Sure, I wouldn't be surprised. Obviously, it's in the U.S. government's best interest to keep crude oil and oil prices as low as possible, right? Especially going into summertime. So I don't know, and that's something I do worry about. Okay, I got to be honest about this. Conspiracy time with Jeremy. Okay, why am I never that interested in playing things like crude oil or even natural gas or things like that, right? There's only one time I really ever did that, and that was right after Rona. And I played, what was the ticker symbol at that time? And I did really good on that. I can't even remember what it was. It was like some sort of leveraged oil play on oil price. And I did terrific in that. USO, was it, or something like that? I think it was USO. And I did terrific on it. I made some really good money. That was the only time I ever played a commodity price in the short term. And that was a really freakish time because oil actually went negative. It was completely unsustainable, which is why I got in it. But I have a conspiracy theory, okay? And that is, I think the U.S. government, they're very incentivized to maybe manipulate these prices somehow and sometimes, okay? And I don't know how they do it. And I don't know why, I don't know, okay? All I'm saying is they're very incentivized to not have natural gas be high right now, to not have oil prices be very high right now. Very incentivized. Because obviously, if we have a summer where oil prices are really high, that means gas prices are going to be extremely high in the summertime, right? Which obviously is kind of devastating the economy. And we know how much inflation's been obviously hurting the American consumer. We're going to go into election season next year, right? If you're going into an election season next year and oil prices are super high, gas prices are super high, inflation's still a concern, it's going to be a mess, man. And it's going to get people voted out of office. So they're trying to clean up this mess as fast as possible. We'll see what happens. But that's why I don't trust in a lot of these commodity moves and why I'm not interested, because I'm just like, I feel like there's so much manipulation that goes on in the commodities market. Yeah, that's all. I'll leave it at that, okay? Wingstop. You want to talk about a stock that's done terrific, right? So 1 year chart of Wingstop. It's up 144%. They've been executing well with their business, and also they've been actually seeing some deflation in some of the chicken prices and whatnot that go into their, obviously their products. And so that's an interesting situation where their margins have been incredible. Their business has been incredible. And the stock price is up 144% in the past year. And it goes to show you, folks, you can find tremendous opportunities in the market. You know how many stocks are down in the past year? A massive list of them. You know how many stocks have had trouble over the past year? A massive list of them. And then you got a stock like Wingstop, despite the market not doing crap, despite so many stocks doing horrible, and Wingstop's up 144%. On a simple business model, like Wingstop, you flipping my flapjacks, what a simple business model, right? And it also makes me think about a stock like I own, Elf Beauty. Elf Beauty's up 280+% in the past year. 200+%. It's done incredible for me, right? But, and it's a cosmetics company, such a simple business model. It's not so complicated, right? You don't always have to be in the most talked about, most hyped out, most crazy business models to make the most game-changing gains. I just showed you two such simple business models. A cosmetics company, a flipping flapjack in place that sells chicken wings, okay? Up 144% and up 285% in the past year. When countless other companies are having so much, you don't always have to be in the craziest, most exciting stock. That's the thing you guys got to understand about this game, okay? I think there's a lot of stocks I own that are talked about a lot, that are going to be some good returners. But I don't think they're going to be the best returners. I think there's stocks that I own that aren't talked about very much that will be the best returners. Of the stocks I've owned over my time, let's just look at me in the past 4 or 5 years. What's the best return stock I've had? Elf Cosmetics. That return over the past, 5 years or so is astronomically high, right? My gains on Elf has been, 1,100, 1,200% or some insane amount, right? And so this stock's done me tremendous. Is that even a talked about stock? No. And you look at other stocks I own, obviously Tesla's been a great returner, but it hasn't beaten Elf, right? Stock like I own Palantir, and obviously that's still a relatively newer position for me, but it hasn't done as well so far, right? And maybe it will in the future, but that's obviously a very talked about stock. You don't always have to have your money in the most talked about stocks to get tremendous gains, man. They can come out of nowhere, and they can be very simple business models, and you'd be shocked at some of the gains you can get in some of those stocks that it's like, wow, that business model, like, what? How did that return 100%, 200%, 500%, whatever? So just always remember that, guys. You got to look for opportunities in the market. There's always opportunities in front of you. Don't buy into all the negative, this and that. You could have got tied up in all that over the past year for what? You could have been in Wingstop making 144% gains. You could have been in Elf making 285% gains. And meanwhile, people are so caught up in all the negativity all the time, missing all these opportunities. They missed Nvidia at $110 last year. They missed AMD at 55. They missed Meta at $88. Missed Tesla at 100. And it's just like, you can get so caught up in all this crap all the time. And meanwhile, you're missing tremendous opportunities. And it's up for us as investors to find those opportunities out there in the market, folks, because they're always out there. And, those gains are life-changing. And then you take it and move it into the next stock and just continue to build out your portfolio bigger and bigger over time, right? Build a great diversified portfolio, growth, value, dividends. Growth, value, dividends. GVD 1, 2, 3, baby, okay? Hope you guys enjoyed today's video. As always, I appreciate everybody joining me. If you're looking to level up your investing game and find opportunities in the market and know how to identify those opportunities, check out the pinned comment down there. There'll also be a link in the description to apply to join my private stock group, private wealth group. If you want to access my Become a Master Stock Market course, that will also be the same exact link, which will be the pinned comment down there. Much love and have a great day.